Hello there and welcome to Africa Business Weekly, your highlight of the biggest conversations that shape the continent's business landscape this week. From our West African desk, Ghana is sustaining its drive to single-digit inflation with an 8% print in the month of October. Now in East Africa, we track earnings releases as Safaricom posted a 5% rise in profits for the third quarter of this year. Well, let's get into the business of the day with our first crossing to South Africa with my colleague Karabo. She's on standby.
AI fintech player Optasia has listed on the main board of the Johannesburg Stock Exchange, making it the fifth and largest listing on Africa's biggest bourse this year. The company's platform plays into rising demand for alternative credit access and data-driven financial inclusion across emerging markets. CNBC Africa's Palesa Mafokeng spoke to the CEO, Salvador Anglada, for more on the company's growth and expansion plans.
What we're doing is solve a problem that exists in the market. There are more than 1.7 billion in the world people that are underbanked. They are not able to access to financial services. What we do is to solve that. We are able to provide financial services, and we do that with technology, with the data. We are able to create a type of parallel scoring system, credit bureau system that allow people to access to those services and to use it for their daily life.
Yeah. And can I ask, what is the free float of your company?
So finally, it's the part that has been public is 30% of around 30% of the company. Yes, so that it's an IPO with the amount is close to 6.3 billion rand, and is what we floated today in the company. It started at 19 ZAR, and the first very moment becoming green, even with all the market was red. Very, very important to see how the stock will perform at the beginning and also during the day.
Yeah, of course. Let's talk about your growth strategy. How are you looking to expand your company? Are you looking at M&As, or is the plan to grow organically? Can you share a little bit about what your targets are, especially at revenue level as well?
Yeah, definitely we're going to continue growing organically. I mean, we are today in 38 countries. We have more than 120 active users every month, but we believe that there is much more potential. So we see continued growth in Africa, in different countries that even we were not. Also, we believe, we can expand our portfolio of products to provide more financial services to the underbanked population. We're looking also at Asia, not only Africa. We have already presence, but we believe we can extend also the platform and the user of the service, and that will be part of our strategy. Of course, most of it will be organically, but also if there is an inorganic opportunity that allows us to accelerate our growth, we will look at it.
And on a revenue level, what are your targets and what's the timeline?
The revenues, well, we provide guidance to the market. I think we're going to continue growing above 25% every single year. And I believe we should be able, hopefully, to double the size of the company in the next 2 to 3 years. This is what we want, and this is what we're going to work for.
I want to come back to the point that you made about growing within the African continent. Which markets would you say are at the top of your near-term expansion list?
For the new market, you mean?
Yeah.
Well, I think there are markets that are important for us that we are not. We are not in Egypt, we are not in Kenya, we are not in Mozambique. And also, if you look at Asia, we want to extend our activity in countries that we have presence, but I think we want to grow. Philippines is one of them, Indonesia, or even Malaysia. All of them are part of our plans in the near future.
What are your views on how the markets have reacted to the listing or the floating today?
Well, I think it's fantastic. To see that the market opened with nearly 10% up in a day that unfortunately everything looks red, and even Asia were red, is a big support of the stock. I think there is a lot of excitement. People has known us much better. They like our story, they like our purpose, they like what we're doing, and I expect more people to come and have a larger amount of investors, also retail investors that come into the picture in the future and support us.
A new G20 report on inequality shows that 83% of countries representing 90% of the global population fall under the World Bank's classification of highly unequal. It cautions that these nations are 7 times more likely to experience democratic decline compared to those with more equal societies. CNBC Africa spoke to Professor Jayati Ghosh, who is the co-chair of the International Commission for the Reform of International Corporate Taxation, for more.
What we found is actually startling even for those of us who've been working on inequality, which is that since the period when people started talking about it, it has massively increased. And it's not just a broader inequality, it is the extreme wealth and the related extreme power of the global elites. That is the very, very rich people and the very, very large corporations, the global corporations. And that is a deeply worrying concern we found. And a lot of the consultations we held and the research that we looked at confirmed this, that this inequality is not just bad in itself. It's not just about economic justice. Yeah. It's also bad because it undermines democracy. It reduces people's faith in the system. It's actually causing a lot of social and political conflict and instability. Yeah. And it is making all of our societies much more unpleasant and even dangerous to live in.
Absolutely. I'm going to talk to you a little bit later about a report that I shared earlier. Elon Musk is looking for a $1 trillion payday. But let's park that for now. Let's talk a little bit about the practicality of the measures that you are recommending here. The suggestion is that this panel should be modeled along the Intergovernmental Panel on Climate Change, IPCC. We've got COP30, of course, coming up. Given the divisions within the world that we have at the moment, how likely is it to reach it, to be able to establish such a panel?
What we are hoping is that a coalition of like-minded countries, those who really feel that this is a severe problem, will be inspired to set up a plurilateral initiative that others can join. And we have already received expressions of interest from a bunch of countries and some international organizations, because I think many people across the world, many organizations and many governments are realizing that this is a very serious problem. So what we're hoping for is an independent panel that will be a kind of an umbrella for all the different networks and researchers that are looking at and studying inequality. And just like the IPCC, it will try and provide an objective framing, assessing the evidence, looking at the quality of the data, providing some analysis about the possible drivers, not doing their own research because there's so much research ongoing, but sharing and assessing the research available, just like the IPCC does on climate change. Yeah. And we are also hoping that such a panel, if it does have sufficient buy-in from countries all over the world and people all over the world, will not just monitor the state of inequality and how it changes and the things that can reduce it or that lead to increasing it, but will also enable people and societies across the world to demand changes.
Yeah. And 2 quick points. In terms of buy-in, which parts of the world are you seeing that buy-in? I'm trying to understand whether this is across both developed and developed countries. And then the second part, the second part of my question, you can answer the first part, I'll come up with the second. I don't want to disturb your flow of thought.
No, that's fine. In fact, well, I don't want to name names, but there are definitely governments interested from both what we call the global north and from the developed.
And those were just a few of the major business stories from Southern Africa this week. Do stay tuned in for more news updates across the rest of the continent.
Thanks a lot for the updates there, Karaba. It's now time to head over to East Africa with Redeemer.
Hello, David. Yesterday, East Africa's biggest telecommunications service provider, Safaricom plc, released results for the 6 months ended September 30th, 2025, with a 55% rise in its half-year profits for 2025, which were majorly driven by strong growth in the data and mobile business. We had an exclusive interview with the telco's CEO, Peter Ndegwa, to unpack their earnings report and ambitious business outlook as Safaricom marks 25 years of being in the telecom space. Take a look.
Safaricom, we announced our half-year results, which is year ended September. Very, very strong set of results at a group level, 11% growth top line and 52% growth at the bottom line, that level. Very strong Kenyan performance, which is 9.3 plus at top line and 22 at bottom line. And then momentum in Ethiopia, in terms of commercial momentum, we are seeing lower losses as a result of a maturing business, but of course affected by a depreciating currency. So a third of the losses that we reported is related to the bill depreciation, both against the US dollar and the euro. The key drivers in Kenya are M-Pesa growing 14 and mobile data, which is what we expected. So we are very pleased that there's momentum around customers, usage across all the products, from payments, credit is back on track, and we feel very good on M-Pesa. And then we continue to grow our mobile data. And in Ethiopia, we are starting to see a business that is getting closer to scale. 11 million customers, now more broad-based in terms of voice contributing more than 20%, complementing the data performance. And we are doing this at a time when we are celebrating 25 years. So Safaricom was started on the 23rd of October 2000. So it's a big milestone and great results.
Indeed, some impressive set of results there, Mr. Ndegwa. And looking at the revenue side of the business, perhaps speak to me in regards to what were some of your numbers in this regard, especially looking at over the course of last year's half year compared to this year. We did see a sort of a strong bounce back on your net revenue.
Yes, so we have actually reported 200 billion Kenya shillings, 199.9 billion Kenya shillings at a group level. About 11% of that growth has come actually from Ethiopia. So for Kenya, we delivered 194 billion Kenya shillings, which is a growth of 9.3. About 2/3 of that growth is driven by M-Pesa, and about 1/3 of it is driven by mobile data. And then on Ethiopia, it is broad-based, 36 growth, but it is of course off a lower base. So we are seeing growth across the board, stable voice business in Kenya, growing mobile data and financial services. And in Ethiopia, we are starting to see the benefits of scale. So our voice business is starting to do better. And despite us being primarily a data network, we are starting to see actually momentum on our voice business.
Pan-African countries have developed sufficient policies to ensure substandard goods do not gain entry within the continent. This has in the past seen nations losing billions in revenues. Although the menace is far from being won, what progress as regards with adoption of standards and harmonization has Africa made so far? We spoke to Joe Kops, IEC President, and Esther Nagari, Managing Director, Kenya Bureau of Standards.
IEC Nairobi office, the African office here in Nairobi for the last 10 years, since 2015. And of course, by the time this office came into Nairobi, we had not harmonized or adopted a lot of the IEC standards. So one of the major milestones has been the adoption of the IEC standards. And adoption of standards basically means that we are able to support trade and as well as industrialization. So when our local manufacturers or our local industries adopt the harmonized standards, which are harmonized both at the African level and also at the international level, that means we are able to access markets, not just within the country, but also globally. So that has been one of the major milestones for having the office here in Nairobi. And we really appreciate the fact that IEC has supported this office since its inception 10 years ago. And as we celebrate the 10 years anniversary, it is time to just look back and try to see what else do we need to going forward, and how do we need to support more of trade through harmonization of standards? How do we need to support more of industrialization through adoption of more harmonized standards?
Allow me to bring in Joe, because we are also seeing a lot of interest in Africa, and at the same time, listening to Esther, it is clear that the standardizations have been able to deepen intra-Africa trade. And from where you sit, what sort of key outcomes do you expect out of this particular week in regards to some of the key issues up for discussion? Plus, is Africa making the right progress from where you sit?
When we started 10 years ago, we had the idea we have to bring the IC to Africa. And that's what we did. And that was the initial purpose. But now we are at a turning point, and that is at the same time a great opportunity for Africa. We want to bring Africa into the IEC. And in order to do so, that requires participation from all African countries into the IEC system. And we are here to help the countries to prepare for standardization, to prepare for conformity assessment, so that they can use it to their benefits.
Esther, perhaps talk to us about how well has Africa as a continent participated, especially in shaping the global standards and innovation on infrastructure in regards to the various technologies that are emerging within our markets.
We have the Pan-African quality infrastructure. This was one of the major milestones that Africa did. We just come together and develop the African quality infrastructure policy, which most of the African countries have actually adopted. Then, apart from the quality infrastructure policy, most of the African countries, there has been increased interest, and especially in terms of participation in the technical committees and having our experts participate, so that we are on the table as decisions on standardizations are being made. We are not just partakers of standards, but we sit at the table to make the decisions when others are making. And this way, then adoption of these standards becomes easier, because then we adopt standards that speak to our needs as Africans.
And those were some of the top business stories shaping the region. Back to you.
Thank you, Redeemer. Now bringing the focus back to West Africa. Ghana's consumer inflation eased for the 10th consecutive month, falling to 8% year-on-year in the month of October. Now, according to the government statistician, the slowdown was largely driven by softer food prices, while key inflationary drivers that once fueled double-digit levels are now losing momentum. Benjamin Boakye, chief economist at Second Stat, says the country is on a stronger path to economic growth with the disinflation trend.
We're very pleased to see inflation come in exactly at target. What I think has factored into this achievement has been a lot of positive tailwinds. So we've seen for the past several months that gold prices have spiked. They may be tapering off a little bit, but they still remain elevated, and that's accruing quite well to the government in terms of its forex reserves or its gold reserves. And then on the forex front, the CD has been quite stable for the first time in quite some time. It's closing out the month at the same level it closed out the prior month, just under 11 cities to the dollar. So that's also very positive, that forex stability. And then also we're seeing a very positive harvest, which is flowing into the strong disinflationary trend that we're seeing in food inflation. So you put all these tailwinds together, and that's helping out quite considerably. And then on the government side, you're getting quite a bit of fiscal constraint. You're not seeing too much overspending. We just had our IMF review. We're getting to the very end of our program with the IMF, and that was a very quick review and approval. So that also is going to give folks a shot in the arm in terms of confidence in the Ghanaian government and our macro stability. And all in all, I mean, that's the context we're looking at with inflation coming in at target.
Definitely good to see the milestone finally hit. I wish we could get the same here in Nigeria as well. But, how significant is this milestone, especially when you look at the moves to restore macroeconomic stability in the country after we've seen the price shocks from last year?
Yeah, I mean, sometimes the external macro conditions can be fraught, and sometimes they're more positive. And what we've done is that in this more recent period of positivity where, like I said, the tailwinds have come in really to our benefit, the government has also done quite a bit of work to double down on that strategy and make sure that it derives all of the benefits. So, you know, we've got a new gold bond program, which essentially is the government purchasing a large amount of domestic gold production to bolster its reserves. And that has helped considerably with the anchoring of the cedi. And that has in turn helped to ensure that imported inflation has been kept in check. So there's a pretty multi-pronged strategy that's being pursued. And it's worked, you know, in the face of the shocks that may come.
No
really,
doubt.
It's difficult to tell what happens next, but we're comfortable where we are now.
Next up, Access Holdings chairman Igboje Mokwede says Africa has the capacity to raise all the capital it needs for its development goals. In a chat with CNBC Africa, he highlights that investments in human capital are key for nation building and emphasizes the need for a new mindset among policymakers and market leaders. Have a look.
Africa has the potential to raise all the capital it needs for investment. And when you are mobilizing domestic investment, it comes from households, it comes from pension funds, it comes from insurance companies, sovereign wealth funds, and even government institutions. When we look today at domestic mobilization of capital, we tend to focus on the banking sector. I'm talking about the deposit money banking sector. From an African standpoint, some of the research seems to suggest that we have about 4 trillion capacity today, of which 2.5 trillion comes from banks and 1.5 trillion from the more traditional sources of domestic capital for investment. The problem with banking capital, particularly if it comes from commercial or retail banks, is that the very nature of their model and the very nature of their regulation requires them to keep high levels of liquidity. And even in their activities, you can't really class a lot of the lending that they do to be lending for investment per se. Some of it must to be short-term, credit cards, things, consumer finance, and things like that, which are very important functions for creating, if you like, the kind of purchasing power that the companies that manufacture and the utility providers, you know, will use when they're selling their goods and services. So you focus really on sources of investment capital, not just sources of capital. So if you think that today in Africa we have maybe 9.5 trillion of such sources of capital, the complaint is still that even is not getting invested. Okay, and when it's invested, it tends to be invested in bonds, government securities, and other investments which provide yield, which provide stability. But in terms of the effect on the productivity of the economy, unless those bonds are financing things like infrastructure, okay, it's not going to have the capitalizing effect that creates national wealth, like you've had in Asia and so on. So my argument is this: whatever trending we had that we're not happy with today, was created by the leaders of the public and private sectors, and continue to be influenced by their policy constructs, the type of institutions they focus on building, the talent and capacity we build. So I don't think the problem is the pipes, it's the plumbers. And so what type of mindset must the plumbers have working together? There are three things that we need. The first is that I don't think at $9.5 trillion across Africa, the installed capacity is enough. In fact, I believe that Africa has a capacity to raise significantly more. For instance, if you think about the households, we have 1.4 billion Africans. Okay. I believe very strongly that we have at least 100 million Africans who can invest on an annual basis $100 billion. And I'm talking about a minimum level of $1,000 in investment per person, which basically is $83 every month. Okay. And look at the demographics. You know, you have what they call high income earners, which is $3,000 a month, you would get, I think, 20 million Africans in that category. You have middle income, which is $1,000 to $3,000 a month. I think you would find about 150 million Africans in that category. And then you have the next level, which is lower middle income, which is, I think, 300 to 1,000. And I think from there, you can get another 300 million Africans. Let's not go to the bottom of the pyramid. You can then see that there are potentially close to 400 million Africans that can save at least $1 million, $1,000 a month, a year, towards investing in the real sector. Now, of course, you need to create conditions that will make it attractive for these Africans to invest in these type of products. So you have special investment accounts with special tax benefits, insofar as the investments that are channeled, that this money is channeled into real sector investments, infrastructure investments, and the type of thing that leads to productivity and leads to wealth creation. So clearly, if really the plumbers have our mindset on the right type of plumbing, and we put the plumbing in place, I think the investment story in Africa is going to be completely different.
Well, that's it on the show this week. Many thanks for your company on Africa Business Weekly, and thanks to my colleagues Karabo and Ridima for the original updates. Do have yourself a lovely weekend. Bye for now.